Welcome back to Wealthwise. I know it's been a while since I've uploaded a video. In fact, it's been a few months now. It's only because the company I used to use before has just dramatically increased their prices, and I think it's absolutely extortionate and totally ridiculous. So I'm not even going to do that anymore. I'm going to go back to what I used to do before I started this channel and using my own software. So welcome. Remember, this is educational advice. It's not advice, it's educational. Just to help you to understand the markets, how they work a little bit better. I've also had a pause because I've been studying the markets even more to make myself even better at this. So welcome back. Now, I'm going to start off by having a look at Bitcoin. It has been a great few months. We've had the bear market start a bit earlier than I anticipated. I'm not going to make that mistake again. As we run up a bit closer to it, I'll be looking out for the signs. Now, as you can see here, the top was the 6th of October for Bitcoin, and that's when our bear market started to happen. This week has been a very interesting trading week. I can show you a little bit more about that later. But here, as you can see, we have liquidation levels left behind up here at these levels. And this is where I was expecting Bitcoin to get to this year, but it didn't quite make it there. About $30,000 off the mark, which is fine. I mean, that can happen. All right, so what I'm looking at here. This line is the resistance line from 2021. It hit on the 11th of March and it broke through on the 4th of November 2024. Now it has, as you can see, it broke down on the 26th of January of this year, closed below, and it has stayed below ever since. This is the support line I was looking at to confirm the bear market is definitely here. But to be honest with you, looking at this is an obvious sign that the bear market was in full swing, and this is your drop level 1 on the weekly time frame. So it's bashed itself down through here. There's a bit of liquidity levels left behind between 77 and 80k, and a little tiny bit here on the 86k level and the 85k level, tiny bit. They're not major liquidity levels. The way I put the yellow, because they're between 100 to 250k. And the red ones is the ones that are more than 250k up to about $1 billion. As you can see, there's a lot of that being left behind up to 120k, and a small amount up to the 130k levels where people have got held on to their beautiful shorts, and they've been holding on ever since. Now, you're probably wondering why I've put this in here. I put this in here because this is pretty similar to the end of the bear market of, was this 2021? This, where the bear market 2021 happened, as you can see here. So that's why I put that in there. It's kind of to see where we're going to head towards the end of it, which was this bit here. So if I take this off, just so you can have a look at what I'm talking about, put that here, that's what I'm looking to happen now, pretty much. If I take, precise. If I take this, which was the 2021, and put it here, look at that. Pretty much the same. I'm going to put that back there because I like it. You can also look at this and think, what else is it? You could say that's a head and shoulders pattern there, and there's your neckline here, and there's your breakage. You could say that as well. But we haven't had an actual head and shoulders here, particularly. You could say this is a shoulder, a head, and a shoulder, an upward direction. But there is your 1, 2, 3 major moves, and it's completed that for the bull market. Quite frankly, I should have seen this coming, but I'm really sorry I did not. But I will be prepared for the next time. I'll tell you what I am prepared for though, and that is this bear market that should end, I'm guessing, September this year. This is a date I've put in, judging on previous, but you know what? It could start the beginning of September. Who knows? What I could do is just put a line in here to be fair, it could start any time between the 24th and the 28th of September. So we could put it like that. So this is what I'm looking at here. Boom, 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 boom. On its way down to make this kind of a level. What am I seeing? Bear market bottom. Now, the last bear market bottom was a 50k level. It could come down to these levels here of liquidity that was left behind during the 2023 move. These are liquidity levels that have been left behind and have never been scooped up since. It could come down to these levels and take them. It might leave these levels, and we're probably looking at the 35k level. But we will map it out and watch it as we go along. All right, so what I wanted to share with you is the US 500. Now, I've done a little bit of drawing in here, just have to ignore those for a second. These are resistant level. Resistance level number 2 is the 7,000 mark. It's really struggling to get above that. On the weekly, it's hit it 1, 2, 3, 4 times and rejected. What have I been doing this week? I've been doing some very interesting trades. Been trading the good old Australian dollar, Australian/US dollar. I've been trading the market in the week, following the signs that the market makers give us, which is the W and M formations. Very, very important to try to look out for those. But when I start my week now, I'm doing on the 15-minute chart. I'll go back to Sunday. Sunday night is the beginning of the week. So you've got Sunday. I've got a bit of a cold, excuse me. And for the Forex market, it starts at 10 p.m. for our UK time. But it doesn't actually open on some platforms, but the one I use is Trader 212 until about 4 minutes later. So it's trying to figure out the opening price, which it tells you up here. You can see up there, it tells you the opening price. So if you look at that price, it says 70084, and the closure price, which is a C level up there, 70112. So it closed with a gap. It opened with a gap. So the gap is above. So my way of trading is I'm going to put in a long position. So long position here, opening was 70084. I probably would have missed that because it took a few minutes to kick in. There's my entry. And I'm now taking a long. You probably think it's a bit risky because we've already had a move up here last week. Yes, it is. But there's a gap to fill, and I want to go towards that gap. We have a M formation here. Yes, we do. But again, the gap is formed above, which tells me that likely to have the fake drop down and then to move its way up. And as you can see, as we go along on a 15-minute chart, we are staying above. Now, move on a little bit further in the week. Monday, nice move up again. And then here, you could say we've now formed a sideways movement, a lower low, a lower high, and we've broken below the indicator. Now, here, let's see what time it is though, because obviously we want to be sleeping at night time. It's 3 o'clock in the morning. I'm going to wait till 8 o'clock in the morning because that's the time that I'm going to be looking at the chart. And I could see here clearly we've got another lower low here, and it looks bearish to me. So what am I going to do next? I'm going to change it to close that trade. It's made 0.827% on a 20x leverage. That is, which is what it does on Trading 212, which I figured out. That's a 16% profit. And then we flip it short. Now, yes, look at that. It's gone up. Yes, it has. But see here, you can, sorry, it's nighttime. You can flip it long if you feel it might go long, but I like to do things in a certain way. So we flipped short this week, and I just held on and held on and held on all the way through all these heights. Pain in my butt side till it came to about here. I'm awake now. It's come down a little bit more. I've closed. I've taken my profits. I've taken my money because I am a bit too, my entry's far too low. Now, when we go back onto this week, move this over to market session end, which ends about there. When I look at this week now, and I look at where I've gone wrong, because you've got to look at it this way. There's a start off point, fake move week beginning, where they want to try to shake out people from the weekend trades or the traders from last week. And then they come in with the real move, which normally happens Tuesday. Yeah? But here, they've given a long signal with the opening having a gap. I flipped short on Tuesday, albeit that was a little bit early than I should have done, because the short should have been flipped on the Wednesday into Thursday. Now, had I done that, which is what I was planning to do, if we go over to hold this into Wednesday, 8 o'clock. So I'll be looking for a sign. It's dropped down suddenly here. I never chase a falling knife, and it's giving me a higher low now. I'm thinking, okay, and it's giving me higher highs. It's giving me a lower low to a higher high. I am not moving, and then it comes up to 8 p.m. I close my chart. I go to sleep. 8 o'clock. I see a few lower highs and a lower low, and it's given me 1, 2, 3. So I've woken up to this here. So I'm like, okay, it's staying under my indicator as well. We are now looking at midweek reversal time. At any point here, you could have flipped short. Any point here, really, and you would have had a decent entry from the Wednesday into the Thursday. So ultimately, this is where we should be flipping short. We've woken up. We've gone, okay, got a couple of lower lows. It's underneath the indicator. I'll put my short in there, and then look at that. Would have had a nice 20% return on your trade. Now we'll leave that in there, and we'll do another video and show you where we end up at market close. Now you're probably wondering, now how did you know that the gap had occurred? Like I said, from closing candle to opening candle, and then looking out for those M signs and W signs, which is a lower low to a higher low is your W, higher high to a lower high was like your M, but you need to obviously wait for market confirmation. And let's go to the week before, and I can show you what it is I was talking about. So here we have a gap. Now the gap is above the opening candle here, so we'll be opening up a long position. So like I said, it might take a bit of time for the market to open. Probably get my entry here. Here we go. Now we're going to hold this trade all the way through the fake moves, all the way through to, I want to get to Wednesday 8 a.m. It's Tuesday. Keep going. Here we go. This is what I wanted to show you basically. 8 a.m. Wednesday. Now we've still got some nice moves up, holding the indicator quite nicely, and then we can see here a lower low, lower low, a lower high, and then this is what I would say is now likely to be the midweek reversal. Any point Wednesday US session into UK on the Thursday session. But I've seen this now. I like the look of that. I'm now going to flip short on confirmation of the move. So what have I made now on the long? Just close it here. Again, I've made 16% on the week. And now I'm going to hold this through till Friday. Here we are. End of play Friday is here. Now you could say, all right, you've now just broken even. Okay, but like I said, you've got to keep an eye on the market here. This is stupid o'clock in the morning. It's now 8 o'clock. What am I seeing? Sharp move down, very small W, wick here, wick there, lower low, lower low. I'll come up here, say, okay, I've got a lower high now. I've got a higher low, and I've got a higher high. That's at 6 o'clock in the morning. So at 8 o'clock when I'm waking up, I'm seeing this kind of movement. This is a V, which you can also look for. I'm like, right, this is where I would most likely switch long instead. So let's bring it back to here. Like, yep, this is all looking good. I'm in. and then you bring your entry is now down here instead. So on the week you've made 15% on your short week beginning, and then this is Friday, you've flipped short, and just move over a little bit, you flipped long, sorry, into end of play. Sunday, sorry, end of play, 21:45 UK time. Let's see where we're at. Got to zoom in because I actually need to see what this looks like. Here we are. End of play is close of candle, another 15%. So overall you've made 30% on your week just by trading the Forex market. Now if we go backwards, week before, so I can show you how it works there and how it worked. I mean, the gaps are obvious some weeks and not so much on other weeks. So if we zoom in here, look, market close, market's open with a gap above, so we're looking at a short. So short it here. Just give you an idea of what I'm on about. I mean, you want to take this all the way and hold this all the way into Wednesday. Now, you could say we're now underwater. Yeah, we are a little bit underwater here. That's absolutely true. So if you hold this all the way, and this could be your first loss. So it's not perfect if you want to go with the gap. It's not perfect. All right, it's not perfect, but this is the whole plan of it. But then you're going to be looking at what's it looking like here. It's kind of holding the line. Yeah, you got your lower lows, 8 o'clock on a Tuesday morning. You probably see here there's a higher low here. Are you going to take it? No, it's Monday. I'm going to wait till Tuesday. What's going on here? We're going to move up. Now you could take the loss, and there's nothing wrong with that. You could take the loss because now you see here higher high, sideways, higher high, higher low. Now you can come out of your trade there, which is when you're trying to read the market. And then just to see what we're looking at here. Yeah, you see that? Okay, yep. It's holding the line. I'm out. Yes, you're down 8%, but that's okay because nothing in this life is perfect. You've got to be able to accept the losses to make the wins. Now you see that change of play, which can happen because no strategy is perfect. It doesn't work. The rules don't work the same every week. So if you go like bish bash bosh, here we are into Friday. Looking at this market here, I'd see this. I'd see that. I'd be like, okay, no problem. But then I'd see a lower high here, and I'm like, straight move down. It's now afternoon on Thursday. I'd be looking for a reversal signal. Would I see it here? Probably. I mean, this is giving me a high low here, so this should be a lower low as far as I'm concerned, and that would be a lower high. That's how I would read it. So I would likely take that short here, and then boom, we've come into the end of play Friday, and we've had a nice little trade there. So you've made back your money basically. So you see that change of direction. It's lost the 50 EMA, which is the red line. You could do that and then short it from here. It's about reading. That's what we're looking at. About reading the market moves all the way to here, market end. So you've lost, so here you lost 9%. Here you've now gained 30%, and here you've gained, oh, my maths is rubbish, 24%. It's 28%, 26%, 26%. So you've totally made up for your loss here just by looking out for these market signs. Now you're probably saying, now, what indicators do you use? I use these indicators. I've got my own indicator. I use volume, because volume sometimes gives us a good reading about market moves and how much money's going into it. Higher high, lower low, higher low, lower high indicator, which also helps. It's my indicator I've created with the help of others. The EMA 50 and a linear regression channel by Lonesome is very good because this also gives you an idea of market moves. I also like to trail it as well because this also gives you value. So I do that with the parallel channel. I do that with it because this also gives you value about ideas of market changes as well. This gives you an extra indication that we're going to be moving up again, or we're going to continue in the downstream. I'm not going to leave this 15 till the 15-minute candle is finished, but this will give you an indication of moves. So if it looks like it's coming above, that means we're looking at a possible reversal or back up. If it comes down, continues to come down, and you just hold your short, and it also validates your trade. But this is what we have done this week. Now you're probably going to ask me, Nat, show me the P&Ls. I can show you the P&Ls. They are on our Twitter account. Oh, I haven't logged in. I will log in. Just bear with me. I'll pause there. Hello. Here we are. So this is this week's P&Ls. February 10th. Here we are. So, and I'll show you the week before how well I did as well. So here's a hype short, 39.95% return. With this one, I like to do 10x because it's a good start. This one is a different one, and say I did this as a 4-hour long-term trading. So ignore that one for a second. I haven't showed the P&Ls on the trading 212 because I don't know how to share those. But Blowfin I can share quite well. Here's the other one, 40% from this week. And had a Bitcoin trade that Sarah, my partner trader, who shared, great return there, 80%, would do 50x on Bitcoin. This is the curve trade. I'll show you that another time. So there you go. So I closed the Australian dollar one. The hype one was closed. I've kept that as well. Nice bit of profit. Happy days. Now I'll show you the week before. Where are we? Okay. So this is beginning of the year. Come on, there we are. This is beginning of the year. This is the hype short start off with. Nice 123% return going into midweek, and then night flips it long. Is that right? Or was it short? Yeah, probably did short and then long, or it was one way or the other. There's a CRV trade that's been going on quite nicely as well. And then the week after, which is beginning of Feb, here it is. Hype, nice. You see the curves increasing. Hype, nice, 63%. Start off, that's fine. There's going to be losses. I'm going to share those. Then here, 72% made up the money, plus added some profit. And then there's this week alone. Now, we're doing really well at Wealthwise at the moment by trading in this way. I hope you've enjoyed this video. I'm going to do a little bit more videos, but maybe I should give you a little bit of... this is a trade. We were waiting on a limit order. I don't think it's going to hit before the market ends at midnight, 10 p.m. tonight, UK time. So this is Bitcoin. What do I see happening with Bitcoin? Just to give you a look at. See, look, I'm following the channel. At the moment, we've just been coming down and down and down. What do I see? We could retest the 215 minutes and clear some of that liquidity above up to the 80,000 mark. We could hit 82,000 and then it'll be continuous on a downtrend. Like I said, I think by September we'll probably hit the bear market lows. That'll be the time to start. Well, I'm gonna start opening up some bots on your exchanges. That's what I'm gonna do. I'm not telling you to do it. It's what I'm gonna do. You don't have to follow me. You don't have to do any of that. This is what I'm going to do, and also open up some long-term leverage trades as well, or 3 to 5x on the current top 10 coins as well. It's a risk, obviously, but it's for the 3 years until Bitcoin hits its heights once again. Well, listen, I do hope that you've enjoyed this video. I haven't been on here for a while. I'll talk about a quick strategy that we've been doing. If you want to join that, links in the bio below to the Telegram group where we put the trade signals in. You can also join a copy trade account, copy the trades directly. But yeah, come and join us and enjoy the ride. At the end of the day, we all have dreams. We do want to make them inevitable. All right, I'll see you next time. Maybe next week I'll do a video for beginning of the week and show you the trades that we've started off with. All right, that's it for now. Speak to you another time. Bye-bye.